What is up, everybody? Welcome to another edition of This Week in Crypto. I'm your host, Brian, alongside my co-host, Dino. We will also be having our founder, Maxim, joining us very soon to talk a little bit about the markets himself. As always, for everybody here, what we'll be doing is going over as many charts on the on-chain side and social side as possible to give you guys a glimpse into how the crypto markets are really looking from an objective data-based angle, and try to give you some context as to what our graphs are showing from a fundamental perspective about the markets right now. We do so with the intention of giving an educated look at everything and what the markets are doing without giving any investment advice. Our job here is not to provide context from our own biases, but rather from a data-backed perspective. So keep that in mind, and let's roll right into it here with our screener, as we always do to start the call. The last week has been a bit of a disappointment for most traders, unless, of course, you're a Shiba owner who saw a return of plus 742% if you've been hodling patiently. We also had Hex at plus 102. And those are the only two alts in the top 100 or so that have doubled over the past week. It's interesting to say that only two altcoins have doubled when it has become such a regular phenomenon over these past 5 months or so. But the reality is that most of the altcoins here have bled quite a bit, and it's largely due to our king coin number one asset in crypto, Bitcoin, being down 12.5% right now. Most assets, as you guys are well aware, are going to be pinned to the success of Bitcoin and stay propped up when Bitcoin rises and bleed rather heavily most weeks if Bitcoin bleeds itself. Now, Ethereum, on the other hand, is doing its own thing and up about 9% despite this fact. And, obviously it's been a roller coaster week where they actually got to an all-time high of above 4,200 before quickly retracing, making a few attempts at coming back to it, hovering around 4,000 to 4,100 for a while, before eventually falling down to 3,600 range and now bouncing back up to 4,000 again. So very volatile times in Ethereum. Bitcoin, of course, dropped down below 50,000 itself, getting to the 48,000s and rebounding kind of as we speak. But overall, it's an interesting time because of the amount of volatility going on. There's a lot of uncertainty. We'll see here in a moment that the social sentiment of the top two coins has been bouncing up and down like crazy because people are, kind of overreacting almost to every single fluctuation that, might have Bitcoin going back above 50,000 and then below to the 48,000 range. Everyone gets negative, and we'll look at that momentarily here. But overall, this is one of the first weeks of the year that we've really seen this level of kind of reactive trading to the extent it is. People are really starting to question whether the bull run is continuing at this point. And when the crowd questions whether a bull run is continuing and they're starting to doubt it, that usually propels it and fuels the fire. But we'll kind of get into the nitty gritty and see how strong that crowd perception is right now.
Yeah, so there's a bunch of very interesting metrics to look into today as far as specifically Bitcoin and Ethereum is concerned. I already see a couple of people. Elon is asking about YFI. I was checking YFI today as well. We can get into it later during the call. There are super interesting metrics from an on-chain perspective for all of those coins. I think before we dive into it though, Max wanted actually to address the audience on this call. He's been looking at more of a technical structure for Bitcoin and the market in general, and had some very interesting ideas as to what it might be the likely scenarios moving forward, just from a structural standpoint. So Max, if you're here and you want to take over for a couple of minutes, Brian can let you share your screen.
Yeah, hi everyone. Now let me Skype. Where I need to share screen here. I think no.
It's in the bottom right corner. There's a
yeah. Desktop. I think this one, if I share, should be fine. I don't know how much you see.
Nothing yet. Looks like I'm no longer sharing, so.
I can see it now.
Yeah, the right one?
Yep, perfect, yep.
Okay. We've been discussing, I think, some time ago, the potential for Bitcoin, and as we thought, for the whole crypto market to went into what here is like a green 4, yeah. So some kind of correction before the final push, and it's a really like, I mean, not the ultimate long-term structure, but quite long structure, which can be when you're talking about wait for 2-3 months, and you know, everything when we discuss, when we do any kind of calls or prediction, it's all like assumptions, but there are assumptions where you like 50-50 and there are assumptions where you like 80-20. And this is one of those where we think like 80% possibility. And yeah, it looks like in Bitcoin it started 1 month ago. So we probably have 1 month to go, 1 month more to go for Bitcoin to range around, and eventually, as we hope, we go down to 40,000, maybe if, even depends on the environment, maybe down to 30,000. So this is already one relatively, I think, well, right now there are a few people saying it too, but this is where we started also 1 month ago, was at the time probably people didn't like me to talk about it, but this is a reality, it's possible, yeah. But the more interesting part, okay, leave alone Bitcoin, yeah? Will it go to 40,000 or 30,000? The interesting part, which we didn't know at that time, what will happen to altcoins. And now it seems to be, market is playing the following game. Whenever Bitcoin is ranging, or even in our case, slowly going down, the alts is using their power to pump. Initially, we thought that as in 2017, once Bitcoin reaches the top, then we have 2 weeks for the whole market, 2 to 3 weeks, the whole market to make it up, and then everything goes down. And this is still so far like 50% chance. There is a 50% chance. And as we've seen it lately, as Bitcoin relatively slowly ranging and sometimes dropping down, the alts using this as a chance to pump. Yeah. And this is the part which we cannot fully rule out. Okay, if we have 1 month more for Bitcoin to range around, eventually go down, slightly up, and then come down, what will happen to alts? Yeah, will they like Ethereum now in the last months just double their price, or will they also pull down? And that's probably the biggest bet at the moment in the whole crypto market. If we're, as we say, 80-20 convinced Bitcoin still has time at least, or price to go down, with altcoins, which of them will have the same destiny going down, and which of them probably will try to use this time to pump up, and we're talking about alt season. So to have a little bit more background, if we're talking about this alt season in terms of data, I had, yesterday we talked in the morning, I made this chart. Say, okay, let me see in our social data, if I enter alt season, no possible variations, alt season, and you see alt and season, alt season, all possible, whatever who you can spell, and put it on the price. I put it on the price of Ethereum because it's more interesting. We could see from the data that relatively to historically speaking, at the moment our social dominance for talks about alt season is low. Yeah, it's 1%. Actually, right now it's even below 1%. It was shortly this morning below, 1%. And just because there are not so much talk about alt season, even though we had this last crazy spike, with all this Doge madness. We could give a more chance. We could give a more chance for alts to pump on more. This seems to be compared to, let's say, March this year, when we had sometimes 5% of all talks. It was about alt season, or even then after March, there was in April there was a strong 1 month ago, when just before Ethereum started to make its bull run, there was increased talk. Now it's relatively low to other conversations, so it's a kind of in the head of people, but it's not as intensive as before. Especially if we look, if we compare to, I don't know, 20th of October 2020. At that time, it was like everyone was expecting and considering alt season, and it happened. But actually, it happened after people, as usually, stopped talking about it. Then we started to go on very, very strongly. So if I would make a call, I would like still to see maybe or ideally 1-2 weeks more of general market suffering, going down and like bleeding, and then we should ideally see the general shift for the whole market participants more bearish. Then we can say, okay, good. Then let's keep it with Bitcoin, and alts might be pumped, ideally, but you never get ideal structure. So we, or at least me, I stick to measures that, okay, Bitcoin for 1 more month, range it maybe going down, recharging the batteries, so to say, to disappoint more and more people, push it away, and maybe build more narrative that Bitcoin is done, and then just surprise everyone. And alts will probably be pumping from time to time. It just suddenly and unexpectedly, and it's very difficult to really play. I would say for time being, it sells the rallies setup for me personally. I would see it in this way. And talking about short term right now, it's enough fear and I know Theta report and food, and yeah, we can go up for like the next few days. It's fine, because we've seen a lot of negative news, and I don't know, Elon Musk negative, and the crowd perceive Elon Musk now not as a hero but as a traitor. So it's generally good sentiment to go up. So short term, I would not be surprised if we keep going, but generally, I would still prefer to sell the rallies. Okay, Dino, you can take over.
Thank you, Max. So yeah, this is something that we've been thinking about very often recently. You know, over the last month, as Bitcoin has begun to consolidate, we've seen first Ethereum. Well, actually, first it was Uniswap. Uni actually started pumping a few days before ETH, and then it was ETH, and then it was pretty much the entirety of the altcoin sort of market. And so obviously there has been an uptick in the sort of mentions and general sort of vibe around altcoin season before this Elon dump. But now that everything has sort of corrected, we've gone way down into sort of a neutral to bearish territory. So according to technical structure, as Max has kind of pointed out, there is a possibility that we might see further sort of, corrections for Bitcoin. And then the question remains, once or if Bitcoin in that scenario begins to consolidate around a specific range, similar to what it's done like the first 2 weeks of May, will alts be able to sustain another leg up? Will it be across the board, or will it be sort of value alts like DeFi? Will it be meme alts like Shiba and Doge and other coins? So that's something that we're going to be keeping an eye on and probably writing daily reports on. Now, as far as short term is concerned, like Max said, there is quite a bit of FUD on the market, and it shows in our data. So Brian, if you want to start us off with a few models, and then I'll jump in and talk about some of the metrics that I've seen for Bitcoin in the past couple of days, which have kind of signaled to me that we might be looking at a short-term bottom. Not obviously, nothing is written in set in stone, but there are some indicators that we are very sort of oversold, and the market is flooding out of their positions a bit too much, considering that it's clearly a sort of a news driven dump. So Brian, if you want to start us off, and then we can move into detailed discussions.
Yeah, you bet. So I was going to show this more toward the end of the call, but considering Max is talking about, the perception of alt season, how the crowd is responding to the major altcoin fluctuations right now, thought it would be cool to actually show where we stand in terms of the amount of address activity that's going on for these altcoins, and comparing that to the actual active deposits, right? Because we often look at the progression of an altcoin through the lens of how much their daily active addresses are rising, but going further granular, not just that their address activity is rising, but whether the active deposits are moving at a higher ratio toward that address activity than the address activity is, or the non-deposit addresses are. So in other words, we look for a high degree of non-deposit address activity and a low range of actual deposit addresses that are interacting within the network comparatively, as a sign that the price is going to surge. Right now, what this model does is it will measure whether there is a large degree of overall non-deposit active addresses going on at any given moment, or a high one, right? So like these green dots here indicate that something like Quant is getting a large amount of address activity at this given time, while something like Kyber with this very low one is showing a very, very low amount of address activity. Generally, you want to favor the ones that are high, of course, but on top of that, these green and red bars indicate whether the ratio between non-deposit and deposit activity is looking good or bad at any given moment. And up until this week, we were seeing mostly green here, with a lot of different assets getting a high ratio of address activity compared to their deposit activities, respectively. Right now, most are in the red. This is, of course, short term, both on the 1 day and 7 day. The 1 day being in the big numbers here in bold, and the 7 day being in the smaller numbers here. They're mostly in the red. They're showing that we are getting an increasing amount of deposit addresses firing off compared to the overall amount of address activity.
So just for people, Brian, who maybe aren't aware of what we mean by deposit addresses, essentially deposit addresses are addresses that are used to funnel these coins to centralized exchanges, right? So when we see an uptick in daily deposits, essentially what that implies, at least, is that more entities are starting to move their coins to exchanges. And then the presumption of why they are doing so is, of course, in order to sell and reduce their exposure. And this is why sometimes we see these upticks in daily deposits coincide, especially when they happen during these sort of price rallies, coincides with local tops, because it suggests sort of an increase in sell side pressure. So essentially what you're saying is that out of the sort of the entirety of daily on-chain activity for these altcoins, there is an increased share of daily deposit addresses compared to other addresses overall, right? Suggesting that there's basically an increased sell side pressure compared to the rest of the activity on the network at the moment, right?
Exactly. Yeah, well said, Dino. We're really just looking at how many of the total amount of addresses firing off are known deposit addresses that we can identify as ones that funnel money to exchanges, which is usually a signal of sell-offs, either occurring right now or about to occur in the near future. So generally speaking, the risk of holding altcoins is higher than usual based on this chart. You can see very clearly the majority of them are showing big red numbers here, indicating high deposit addresses compared to activity. We do see one exception that's very important, and that is Ethereum, which actually is still looking good. The amount of the normal ratio of Ethereum compared to the past 1 day, for example, is showing that we have a 28% higher amount of address activity compared to deposits. We can also see that just overall address activity is up 45% yesterday compared to the past 3 months of mean. And I'll actually visualize that really quick here before we move on to the sentiment related topics that I want to make sure Dino and I get some time spent on. So I'm going to remove this really quick. I'm going to add in address. Actually, it's called daily active addresses, active addresses, and then active deposits.
Yeah, you're gonna see an uptick in deposits over the past couple of days for sure. It's
Yep.
just that the general on-chain activity on Ethereum is still very high. But even when it comes to Ethereum, there's definitely been like compared to the last month, over the past 48 to 72 hours, there has undoubtedly been a spike in the amount of Ethereum moving to exchanges via deposit addresses, right? So overall, first of all, we have seen sort of a long-term decline in the amount of deposits being used for Ethereum. There's a couple of explanations why. One of them, of course, being the proliferation of decentralized finance, both in terms of yield farming as another use case for a lot of Ethereum, and then on the other hand, the proliferation of decentralized exchanges like Uniswap, SushiSwap, 1inch, which wouldn't sort of show up or register among these deposit addresses, right? So those are some of the reasons why we would see sort of a long-term decline in the activity of deposit addresses as related to Ethereum. But even with all of that said, the last couple of days have signaled an increased amount of entities moving their Ethereum to centralized exchanges in particular, suggesting increased fear among some Ethereum holders and potentially sort of a pivot to risk off behavior for the time being, right, Brian?
Exactly. We very clearly can see that the address activity is rising over the last 6 months while deposit addresses are falling, even though over the past week we do see that modest rise, but it's mostly been in tandem with the overall address activity rise. As Dino said, there are a lot of reasons for this, DeFi related, what have you. But overall, I mean, this is the kind of pattern that you want to look for: rising addresses over time, declining deposit addresses over time. This is um, about as extreme of an example as you will typically see, other than maybe a brand new altcoin that is just absolutely fired off with the kind of ratio that allows for this kind of price to move up the way Ethereum has in the last 6 months to even maybe a more extreme degree. But yeah, this is one of the really big types of indications that a price can rise. And I definitely, if you have your Sandbase Pro account, I would recommend that you look into how these two metrics are interacting with one another, especially just overall seeing that active addresses are rising. Besides that, I also want to look at supply on exchanges, since it's pretty much of the similar vein to what we just looked at. Supply on exchanges is showing that overall the percent of total supply on those exchanges is continuing to decline. We were sitting at about 23.5% back in November of 2020. We're now at only about 18%. That's a massive drop when you're talking about the overall market cap of Ethereum and having about 5.5% exit exchanges during this major bull run. So one indication that the bull run could be coming to an end would be this brown line starting to rise again. And then, of course, I'm contrasting that to the overall amount of tether that's sitting on exchanges. Now, ideally, we want to actually see the amount of tether move up over time, but it's, of course, less important and arguably much more pinned to Bitcoin, right? If we want to look at Ethereum, something like DAI might be an interesting contrast as well, but we won't, spend too much time on this today. Overall, though, I just want to point out that the supply on exchanges for Ethereum, due to DeFi and the other options for staking Ethereum, existing now more than they ever have, it's all contributing to this line continuing to decline here. And the last model I want to show before we kind of together, Dino, go over the weighted social sentiment would be this this chart of NVT, which for those unfamiliar, what this chart essentially does is show what the overall market cap is at any given moment, aka the price, because they're going to be in tandem, and then divide that by the amount of token circulation happening, which would be the amount of unique tokens interacting and moving from wallet to wallet on a given network. Generally, the higher this ratio is, that means there's a further distance between market cap and circulation, which is bad. You want circulation to be rising and making this ratio lower with these low bars here, like we saw back in 2017. And then if it's higher, that means that there isn't as much circulation as this model would expect there to be at any given time. Right now, of course, with Bitcoin at just above 50,000, we need to see higher token circulation now than there would be back in, say, 2017, 2018, when the price was about a tenth of where it is now. And it's refreshing now, as it loves to do as soon as I click back to this model, even though it's all working as I prepare it before these calls. But give it just a moment, and I'll also show what Ethereum looks like. In short, it's going to be a complete contrast, or 180, compared to what you're seeing with Bitcoin. And it's been this way for a few months now. Bitcoin has been looking bearish since about mid-March or so, which is why you saw those 3 red columns showing up there. But before that, Bitcoin was actually looking pretty good. And during the rally where it was able to get up to about 64K or so at an all-time high, we were seeing that it was getting a very healthy amount of circulation. And Ethereum here, when it finishes updating, there we go. We can see very clearly that it's been staying in the green here for just about a year now. 12 straight months of green is a prime indication that we are going to see this kind of ascension. You know, give or take a little bit of volatility along the way, almost every month has seen a big percent rise. And until we see circulation finally starting to taper off, there's no reason that Ethereum can't continue to branch out regardless of Bitcoin's performance, assuming Bitcoin doesn't just have an all-out dump similar to what happened in Black Thursday about 14 months ago. So very interesting contrast here between Ethereum and Bitcoin that I'll continue to try to report on these calls at least every other week or so.
Good stuff.
So Dino, we're going to transition over to weighted social sentiment now. And I'd love to hear your thoughts about where we are with Bitcoin as far as Twitter sentiment goes. I've got it weighted sort of ticked down to pretty granular smoothing right now. So based on this, you know, we're seeing one of the biggest spikes we've seen in 2 years, if not all time, in terms of positivity, despite it dropping, which is kind of a rare pattern. And maybe you can elaborate on why you think this may have occurred.
Yeah, so first of all, if you zoom into the last maybe month or so, you will see that this spike has been very short-lived, and it's actually already moving back into the neutral to bearish territory. So it seems to suggest that a subset of the crypto community has been sort of hopeful that this dump that we were seeing, yeah, there we go. We're already sort of on our way. And I think, Brian, if you take the right scroll there below the chart and you move it a little bit, there we go. So that's the entirety of the Bitcoin sentiment at the moment. So we're seeing it move back into the bearish territory as expected, honestly, given the recent price action. Generally, what this seems to suggest, according to our data, and you see the exact same pattern when it comes to Ethereum's sentiment yesterday, it's that a lot of people were just shouting buy the dip. They thought that the dump was not organic. It was a news-related dump, which a lot of people in the market don't believe really lasts for a very long time. And it's sort of a an interim relaxation for the market before another uptick or another sort of segment of price recovery. So that's why I think there has been a sort of a sudden uptick in the general mood of the crowd towards both Bitcoin and Ethereum yesterday, but it's already sort of slouched down as Bitcoin has sort of struggled to recover fully, right? Obviously, given the news. So there are a few very interesting metrics that I actually wanted to share about Bitcoin. If you don't mind me sharing my screen, Brian.
You bet.
I was looking at, obviously, Bitcoin and Ethereum very closely over the last couple of days. And there are some super interesting patterns that I wanted to sort of go over today. By the way, while I'm talking, since it's already sort of a half an hour, we're already half an hour into this call. Let me know what coins you guys want us to look into like about 10 minutes from now. I've already seen YFI being mentioned in the chat. If you have specific coins, I know a lot of holders might be in a little bit of pain today. Actually, today it's there's already been quite a bit of a recovery wave, but a lot of coins are still down. So if you want us to take some assets, do some impromptu analysis on them, especially if they're Ethereum-based assets, because that's where we have the majority of our on-chain data and on-chain coverage. Let us know in chat, and we'll get to that in about 10 minutes. All right, a few things about Bitcoin, because I titled this video, How Are Bitcoin Holders Reacting to this Elon Musk Dump, right? So we have a bunch of different metrics that all try to gauge the general sentiment of the coin's holders. And in cases like these, when you have these massive, minus 10, minus 15% drop-offs in a single day, you usually see these huge responses, both in the network activity and social activity of Bitcoin or any affected coin. And this time was no different. So let's first of all look at the exchange inflow for Bitcoin very shortly. So this is the amount of BTC moving to known exchange wallets. So first of all, we've seen this sort of significant spike in the exchange inflow shortly before the actual dump, suggesting that some amount of increased sell side pressure was already moving. What's more interesting to me is that what happened after the dump. So what happened after the dump was another sort of cluster of spikes in exchange inflow, which is very similar, if you notice, to what we've seen during previous bottoms for BTC at the end of April. So what this seems to suggest is that, and we'll see sort of further proof of this in a few other metrics for Bitcoin, what this seems to suggest is that following the dump, there has been a substantial increase in the amount of Bitcoin moving to exchanges, presumably to sell. In other words, there were a lot of paper hands, people in pain, looking to reduce their exposure in Bitcoin as soon as possible because they were expecting further corrections. And usually, so this, I don't want to say usually, sometimes we do see these sort of spikes in exchange inflow earmark local bottoms when they happen during periods of price corrections. So somebody mentioned YFI in chat. That's what I wanted to compare it with because it's very similar. So let's look at YFI. This is the last month of YFI. I only want to look at this particular group pattern here. So we have two big spikes in YFI's exchange inflow, right? We have one here around the all-time high, and then we had another one sort of around the bottom for YFI. So I talk about this quite often, both in these calls and in some of my insights. Spikes in exchange inflow can actually often mark both tops and bottoms for the coin. So when you see spikes in an exchange inflow during local tops or all-time high tops, what it essentially means is that, number one, a lot of people are moving to sell. But number two, in order for this type of sell side pressure to be effectively absorbed, what you would need is YFI holders, YFI bulls, to be able to absorb this sell side pressure or to buy in at a massive premium. So essentially, you look at the price of YFI, which has grown from 50K to 80K in about two days' time. What you would need in order for this type of increased sell side pressure to be rejected is for a lot of YFI bulls to be happy with buying YFI at an increased rate compared to just 2 days prior. And that's usually why you don't really see a sort of, or you often do see a correction shortly after this spike in exchange inflow. However, when you see these drop-offs in the coin's price section, and following a drop-off, you see a massive spike in exchange inflow. First of all, what it suggests is it suggests holder capitulation. It suggests short-term holders looking to get away from the coin, reduce their exposure, moving on to a risk-off behavior. However, it usually seems to be much more effective or much easier to absorb these types of spikes in exchange inflow if there's enough buy the dip pressure. So if there are people looking to acquire YFI at a discount rather than a premium here, these spikes in exchange inflow can be quite easily absorbed absorbed and point to a sort of period of short-term recovery. So moving back to Bitcoin, this is what we've seen the last time around during the last Bitcoin bottom. So let me move into the last month of data. There you go. So this was the first sort of drop of Bitcoin. Then we had another couple of spikes in Bitcoin's exchange inflow, suggesting that holders were capitulating, but also suggesting that there was enough buy the dip pressure in order to counteract or counterweight these sell-offs, and as a result, sort of mark short-term bottoms. Now, another very interesting metric that I have seen and that I wanted to talk about is Bitcoin's network profit loss. So this I thought was super interesting. First of all, we need to explain how network profit loss works. The way that this metric works is for every unit of Bitcoin that moves on the blockchain, we take the price at which it was last moved. So let's say there was a unit of BTC that was moved here, right? And we take the price at which it was moved and assume that this was its acquisition price or its buy price. And then the next time that this same unit of Bitcoin moves on the blockchain, we take this price and we assume that this was its sell price. So we take the differences between these two prices for each unit of Bitcoin moving on a daily basis. And what you get is this chart, which essentially tries to calculate the overall ROI of all daily transactions on the Bitcoin blockchain. So when you see a spike in network profit loss like we see here, it suggests elevated profit taking. And then when you see drop-offs in Bitcoin's network profit loss like here, it suggests that the coins that are moving at these points in time are moving at significant loss relative to the time at which they were last moved on the blockchain, or at least compared to the time where they were presumably acquired, right? So similar to exchange inflow, first of all, we see a sort of a stretch of profit taking shortly before the before the dump. However, even more interesting to me is that we see two of the biggest drop-offs in Bitcoin's network profit loss pretty much since the start of the rally. If you look into sort of more aggregated data look here over the last 6 months. So if we zoom back in, you will notice that compared to pretty much even this dip here, we are seeing a major drop in the network profit loss for Bitcoin over the last first of all, over the last 24 over the next 24 hours after the dump. What this seems to suggest is that a lot of people are selling at a loss. Bitcoin might be a bit oversold. A lot of people seem to be heading for the hills, trying to take advantage of as much profit as possible before Bitcoin makes another sort of correction down. So in general, it does seem to suggest an increase in FUD, fear, uncertainty, doubt, and a stretch of panic sell-offs by some Bitcoin holders. Now, similar to spikes in exchange inflow around local bottoms, these dips in network profit loss also can mark a local bottom sometimes, because like I said, what they essentially show is that a lot of people seem to be overselling the coin, is that a lot of people seem to be overreacting to market action, and as a result, there might be, considering that or assuming that all other fundamentals are looking fine, there might be a potential for short-term price recovery. So when we look at YFI again, and we look at its network profit loss, it's almost the exact same picture. So let's look at the last month. First of all, we have this massive spike in YFI's network profit loss, as you would expect, because YFI has sort of shot up by like 30% here. Obviously, a lot of the coins that would be moving here are moving at significant profit, but overall, it does also just suggest that a lot of people or a lot of holders of YFI are moving to take advantage of the pump and claim some of these profits. On the other hand, however, right around the local bottom here, before the recovery, we've seen a major dip in YFI's network profit loss. So what this suggests is that on average, the coins that were moving at this point in time were moving at a relative loss compared to the point in time at which they were acquired. So it was probably people that or holders that have acquired YFI over the previous sort of 72 to 96 hours or whatever, they were now dumping their bags, essentially looking to exit because they were sort of Probably because of the Wolfie hype or whatever, they expected YFI to grow maybe to 100K and above. However, given the market-wide correction, they no longer felt confident in their coin choice and then started exiting the coin in droves. So similar to Bitcoin, we have seen this sort of mark local bottoms, fairly few opportunities, because essentially what it does show is sort of an increase in FUD selling, panic selling, and in general sort of oversold conditions in the short term. So I thought that was a sort of interesting juxtaposition between Bitcoin and YFI and how similar some of their metrics looked over the last 48 to 72 hours. One final thing that I'm going to show before we look into audience questions is looking at MVRV. So one of the metrics that we can't really not talk about as far as both Bitcoin and Ethereum are concerned, MVRV ratio, what it tries to do is it tries to calculate the average profit or the average loss of a certain group of Bitcoin holders. So in particular, what we're looking at here, rather than looking at the MVRV ratio of the entire life cycle of Bitcoin, we're looking at only the 30-day MVRV ratio of BTC. So this particular metric tries to calculate the average profit or the average loss of all Bitcoin, of all addresses that have acquired Bitcoin in the previous 30 days. So the way that on-chain analysts use MVRV is that the higher the MVRV goes, the more unclaimed profits there are, and therefore the more likely it is that holders will begin to take or claim those profits, and as a result, impact the price of the coin negatively. And then the lower the MVRV gets, according to this metric, the more sort of undervalued an asset is. So I have written about Bitcoin's 30-day MVRV as it was dumping here on the sort of at the end of April, and I noted in a weekly pro report, which goes out at the end of every week. So if you are a Sandbase Pro subscriber, you'll get an email for this week's pro report that I'll be publishing later on. I wrote about how Bitcoin's 30-day MVRV has, over the past 2 years at least, actually this is 3 years, has shown a tendency to bottom out between sort of minus 12 and minus 15%. Yes, there were several sort of forays into massively sort of low MVRV levels, but number one, this was obviously a coronavirus crash and a massive outlier. But in general, even these outliers or black swan events, they don't last more than a couple of days. And even then, what they actually suggest is that Bitcoin is massively undervalued, and as a result, there might be a potential for price recovery, right? So Bitcoin's 30-day MVRV currently is about minus 10%. What it means is that on average, all of the addresses that have acquired Bitcoin in the previous 30 days are currently at minus 10%. So this isn't a perfect metric because it uses the activity on the network, and not all activity on the network are buys and sells, but it's a pretty good gauge overall as to where Bitcoin's short-term holders are at the moment and what their sort of level of sentiment is, right? So minus 10% is where we are at the moment. And like I said, usually, or in the past 3 years, Bitcoin's 30-day MVRV has shown at least a tendency to bottom out between like minus 12 and minus 15%. So it seems, or it makes sense to me, that we would see sort of a short-term recovery at these levels. And actually, when we zoom in, Bitcoin is already at minus 8% because it's sort of an established bounce back zone. It's not for sure or guaranteed that Bitcoin is going to bounce back off this level every time, but based on historical trends, it's at least a known support level, right? Now, that doesn't necessarily mean that we are completely that we are undervalued across the board based on all indicators. There are two indicators for me that are still quite concerning as far as Bitcoin's concerned. Number one, Bitcoin's 365-day MVRV ratio. So basically the average profit or loss of all addresses that have acquired Bitcoin in the previous 365 days. So relatively speaking to the rest of this 6-month rally that we're having, Bitcoin's 365-day ratio is pretty low. We're at plus 28%. So on average, longer-term Bitcoin holders are on average plus 28% of their initial investment. Now, although that is quite low compared to the peaks that we've seen during January, February, and March rallies here, it still means that there are more unclaimed profits, unrealized profits by long-term Bitcoin holders that can be taken advantage of if they believe that the market is in peril and that Bitcoin has further ways to go down, as even Max believes that there might be a likelihood of because of the technical structure, right? So yes, even Bitcoin's 365-day MVRV ratio is relatively low, but it's still sort of almost higher than at any point during 2020. So you couldn't really call it undervalued at this point in time. Like I said, the higher the MVRV gets, the more overvalued the coin is according to this metric. But the lower the MVRV gets, and you can definitely see that Bitcoin's 365-day ratio has gone as low as minus 50%. The lower the MVRV gets, the more undervalued we are. So as far as long-term Bitcoin holders are concerned, there's still some profits to be had if they believe that the market has further ways down, right? So that's number one. And number two is the behavior of large Bitcoin addresses. So that's the last thing that I'll cover before we look into specific coins. So this is something that we'll look at every stream. We look at the combined holdings of the addresses holding between 100 and 1,000 Bitcoin and 1,000 to 10,000 Bitcoin. So these two groups of holders, and we're going to zoom into the last 6 months, these two groups of holders are essentially Bitcoin millionaires. And looking at their behavior over time, you can definitely see sort of overall trends and how they translate or correlate or coincide with the price action of Bitcoin. So I talk about this pretty much every time on the stream, but you see periods of sort of a decline in the total amount of Bitcoin being held by these addresses around local tops for Bitcoin. So we've seen it here where Bitcoin started to consolidate. We've seen another sort of offloading event around Bitcoin's February high. We've seen another around 50,000 Bitcoin being offloaded by these addresses at the March all-time high. And then another sort of minus, I believe this was like 60,000 Bitcoin being sort of moved away from these addresses in around 72 hours before Bitcoin's ensuing drop-off. So since April 14th, this is, by the way, we're looking at the percentage of the total Bitcoin held by these groups of addresses. So currently they hold about 48.4% of total Bitcoin in supply, but we can look at what that means in terms of actual absolute numbers by moving to absolute, merging them again. So let's just calculate how much these addresses have shrunk in their collective balance since the all-time high for Bitcoin. So we started 9.16 million on April 12th, and today we are at, let's zoom in and see exactly where we're at, 9.05. So this is 110,000 Bitcoin, and sort of a shrinkage or a decline in the total balance of large Bitcoin addresses by 110,000 since the all-time high for BTC. So this is one of the things that to me is still a little bit concerning. Now, we are seeing finally a slight little uptick in the total balance of these holders, potentially signaling a change of heart and finally a pivot back to accumulation, but it's too early to tell. So this is a chart that I pay close attention to. I write about it every week in our weekly report. So far, it's not showing me sort of, it's not indicative of a massive rise in confidence among some Bitcoin whales. Rather, it suggests that at least a subsection of large Bitcoin holders is feeling relatively concerned about the short-term and mid-term potential of BTC. And as a result, we are seeing a declining amount of BTC held by these addresses. So until we see sort of another sort of period of accumulation like we've seen in March here, there might be a challenge for Bitcoin to make full recovery moving forward. So sort of a mixed bag. Some of the metrics, I believe, do point to a likelihood of a short-term recovery. However, this particular metric, keep an eye on it as we move forward over the next week. I think it will be very telling what large Bitcoin addresses do and how that will impact the price of BTC overall. All right, scene. We're gonna look into what sort of coins the crowd wants us to check out. Okay. Max, what were the top results as far as the coins that people want us to look into? Chainlink, okay. Okay, Chainlink and MATIC.
By the way, I think it's a very good choice. Maybe Chainlink too, but especially MATIC, because if we're speculating on Bitcoin ranging or going slightly down and alts having their party, as we say today, get out of the house and mice dancing on the table, then that will be three main candidates. Yeah, of course, everything around NFT. It's always like an interesting hot topic. And then a second layer. Yeah,
right.
It's second layer with existing and proven adoption like MATIC. I think it's an interesting play. So that's a good choice. And League by itself is always an interesting play. Whenever market gives a chance, it pulls nicely just because of its huge marketing machine.
Yeah, of course.
It's a legal version of Ripple, yeah. Legit version of Ripple.
Legit version, yeah. That might be a better way to put it. Okay, without going into valuation of different projects, let's check out what MATIC is looking like overall. So obviously we're seeing another uptick in MATIC's price, probably the biggest sort of L2 project at the moment as far as its adoption, as far as its marketing is concerned. So it's not surprising that MATIC is one of, I think, the best performing coins over the last 24 hours, at least compared to what happened shortly after the Elon Musk dump. So first of all, let's look at the sort of overall level of activity on the MATIC network, right? I want to start with just checking out the total amount of addresses interacting with MATIC and where we are at the moment and where that stands compared to other ERC20 coins, right? So as it stands at the time of writing or at the time of recording, MATIC's unique addresses, the amount of unique addresses interacting with MATIC, by interacting, I mean sending or receiving MATIC, over the last 24 hours stand at 6.6K. So there's about 6,600 addresses sending or receiving MATIC in the past 24 hours. That's a lot. Quite a bit. We can actually see very quickly where that puts MATIC in the sort of realm of Ethereum-based coins. We just go to the screener here.
And you know what I saw on the chart now?
Mm-hmm.
You couldn't go to screen. So it's a quite typical picture of emergent divergency in the final wave of price pushing up. Super strong on the wave 3 in the middle, this one.
Yeah.
Super active. And then even though price keep pushing, there is less participants.
A declining demand.
Yeah. We can check also a new network participant, and I don't know how closely it will be social.
Yeah.
Volume, or trading volume or transaction volumes, anything. But looks quite clear, the picture.
So, okay, well, we're going to start with daily active addresses. So like what I'm showing right now is our sentiment screener. So first of all, let me reset all the filters. What you can do here is this allows you to filter out all of the assets in our database by a bunch of different metrics that we have on the site. So without any filters included, we have currently 1,900 assets on the site. So first, what we want to see is we only want to look at coins that live on Ethereum-based coins. So we click here on market segments and we say, okay, only filter the coins that are currently using the ERC20 standard or are built on Ethereum. That leaves us with 1,200 different coins. So the next thing that I want to do is I want to see how many of these coins have had, let's say, more than 5,000 addresses, daily active addresses, over the last 24 hours. That's 10. All right. And now let's look at the list of these coins. It's Ethereum, obviously. It's Tether, it's Chainlink, it's USDC, and then it's MATIC. So this would put MATIC as like one of the most used coins on the Ethereum blockchain. It's sort of, I don't think it's completely sustainable, to be honest. Like MATIC currently has had more active addresses than DAI over the last 24 hours. Shiba is a clear outlier. It's a hype coin. Yes, there's a lot of addresses interacting with Shiba at the moment, but I also don't believe that the level of activity that we're seeing with Shiba at the moment is sustainable over the next month or two. I might be proven wrong. We've got a few sort of canine coins, basically just meme coins in the top 10 here. But overall, MATIC is currently one of the most used ERC20 coins on the Ethereum blockchain. So great for MATIC. And in general, I think if it can prove to sustain these levels of on-chain activity, I mean, MATIC could be a force to be reckoned with in months and years to come. The question is, can it, or is this mostly just, price-related activity or price-related increase in demand? So the biggest question is going to be what happens with the price of MATIC, what happens with the on-chain activity of MATIC after its price inevitably at some point starts to decline, right? But at the moment, I mean, yeah, Max is right that we've seen the sort of biggest uptick in the demand for MATIC here. So even with this latest rally or surge in on-chain activity, the general trend is down, or sort of there's a clear divergence between the on-chain activity of MATIC and its price action. So that's slightly concerning. But in the absolute 6,000, we're still live in the stream. Max, are we still live? Okay, might be just my YouTube. If you're still in chat, too. Yeah, if you're still in chat, just let us know if you can still hear us and see us. All right, so looking at the exchange info for MATIC, so the amount of MATIC coins moving to exchanges. So let's move into the last month. Yeah, we're starting to see another sort of uptick in the amount of MATIC being moved to exchanges. Slightly concerning, right? Generally, it's not the biggest spike. And maybe if you look at daily deposits, we're going to see, yeah, overall daily deposits remain fairly high at about at about 250. But it's not, I would actually expect to see a bigger or a stronger move up as far as the amount of MATIC being moved to exchanges. This is fairly timid compared to its price action. Still, a move is a move and an uptrend is an uptrend. So be a little bit skeptical or be a little bit concerned about this spike in the amount of MATIC moving to exchanges over the last 24 hours. Now, we can also check out the social volume for MATIC to see what the crowd is feeling and how much the crowd is talking about MATIC. First of all, let's zoom out to the last maybe 3 or 6 months. There we go. Okay, so another concerning signal for MATIC here. Social volume is shows the amount of mentions of MATIC on crypto-related social media channels that we track. So currently we track at about 1,500 different channels. This includes Telegram groups, crypto subreddits, Twitter accounts related to crypto, pretty much anywhere that we can find the main topics of discussion revolving around cryptocurrencies, we try to listen in. And what you see here is the amount of MATIC mentions on crypto social media channels that we track relative to its price action. So in the past couple of hours, basically in the last 12 hours, we have seen another strong uptick in the amount of mentions of MATIC on crypto social media. No bueno. Obviously not the end-all be-all sign, but overall, we have often seen these spikes in social mentions signal short-term tops, or at least sort of a period of short-term price normalization, even for MATIC, not just overall, but for MATIC, we have seen it here. We have seen it here before this correction. Obviously, there was another leg up, but the amount of mentions of MATIC kept being high, so we had another sort of period of correction. We had another big spike in social volume for MATIC before this drop. We had another big spike in social mentions of MATIC before another drop, and so now we have it again. This is, like I said, it's not guaranteed that we're going to see MATIC correct from these levels. However, it's certainly concerning that there's an increased amount of chatter around MATIC. So why is that concerning? Overall, we've done some backtests on this. Overall, our backtests have shown that strong spikes in the amount of mentions of a particular coin on crypto social media coincide with about a minus 13% correction over the next 20 days, on average across the coins that we have sort of evaluated. Now, the reason why, at least in our opinion, is that first of all, these spikes in social mentions during price appreciations suggest that there's sort of a period of peak hype approaching, where everybody is becoming irrationally confident about the coin's market performance and future performance, and as a result, there's a further likelihood of overvalued and overvalued conditions. And then the second thing that it suggests is that everybody that has wanted to get into the MATIC rally is already in, or the majority is already in. So there's going to be a lack of buy side pressure moving forward, or there's going to be a likelihood of a reduction in buy side pressure moving forward, because everybody that has wanted to buy MATIC is clearly already aware of the pump. So these are some of the reasons why these massive spikes in social volume sometimes seem to indicate a potential for short-term price correction. So last week, somebody asked me about ADA. Last week on this call, this was right here. And I said, we don't have on-chain data for ADA, for the Cardano blockchain, but we do have social data, development activity data, and other indicators. So I said last week that this was a fairly concerning signal, and I made a signal on this call using SanR, which is our platform for decentralized market intelligence, where you can create signals as to where you believe the market is going to go next, whether you believe a coin is going to go up or down, and each of the sort of signals that you create get logged on the blockchain forever, and they become a part of your market reputation. And as a way, in a way, you can use SanR as your own blockchain trading journal, but you can also use it to improve and build your reputation as a market analyst. And afterwards, even tokenize your newfound market reputation and monetize your market know-how. So you can see that at the moment, I actually closed it, but my ADA performance was very bad. It's minus 25%. The reason why, though, is because I just forgot about this signal that I created. I will show you when I created it. So I created it here, and I said, okay, from this point on, I believe that because of social volume of ADA, there might be a likelihood of a short-term correction. And indeed, I was on point. I just forgot about the signal later on and forgot to close it when the market turned and the general sort of fundamentals for ADA moved back or normalized to its previous states. But this is where I said last week on this call that ADA might enter a short-term correction because of its social volume, and this is what happened afterward. So moving back to MATIC, obviously this is not an investment advice, and there's no guarantee that we're going to see a correction from this point on. However, it does suggest that the crowd is very, very aware of the rally, and we might be looking into overvalued conditions. All right, let's look at MATIC's MVRV, and then we're going to check out Chainlink. All right, so another sort of concerning sign for MATIC in the short term. Now, we're only looking at here, we're talking about maybe the next day or two, not necessarily what's going to happen with MATIC, a year from now. But very short term, another concerning signal is the 30-day MVRV ratio for MATIC. So similar to Bitcoin, what this shows is the average profit of all addresses that have acquired MATIC in the previous 30 days. And let's look at the last year of data to see where it fits. So currently we're at about plus 87%. So the short-term MATIC holders are about plus 87% on their initial investment on average, according to on-chain activity. If we look at the last year of data, we can see that we have rarely been able to sustain these levels of MVRV for more than a couple of days tops. So we had it here around the first sort of spike in MATIC's price action before a correction. We've had it here as MATIC also had another sort of peak above 0.2, I believe, before another correction. We've had a similar level of MVRV on March 13th as MATIC hit a new all-time high, and then today. So according to MVRV, the 30-day MVRV ratio, this level of of MVRV has rarely been sustainable over the past year. So it does seem to suggest that there's a potential for overvalued conditions for MATIC in the short term. If we look at its long-term MVRV ratio, what do we see? We see a similar image. Long-term MATIC holders are at about plus 300%. So we're still not like where we were in March here and February, but I don't think we need to be. This is still fairly concerning. Like you can see that we've peaked even lower than this during the April high for MATIC. So according to MVRV and according to social volume, MATIC might see a short-term correction, but obviously, nothing is guaranteed in life. All right. What do we do? We had Chainlink, right, Gary? I believe it was Chainlink. Okay,
we're already top.
Yeah, we're already 5 minutes over. So let's do a quick analysis of Chainlink, and then a retreat for the day, and we can keep talking in our Discord. The link is in the description of the video. All right. So check out active addresses on Chainlink. So yeah, Chainlink's daily active addresses currently are around 10,000. So this is fine for Chainlink. This is actually not even that high. If we look at the last year, Chainlink's on-chain activity has at points, like even if you discount these outliers, it has easily gone to like 15,000. So first of all, Chainlink's general on-chain activity is very solid, stable. I would, however, like to see sort of this sustained uptick in its on-chain activity, in the amount of addresses interacting with Chainlink, because essentially what it suggests, or the way that you can think of it, is as a proxy for the amount of demand for Chainlink on a daily basis, right? So as long as there is an increase in demand for Chainlink, the rising price action is warranted from a fundamental or a behavioral standpoint. It's justified. When it's not, that's where we get into troubles. So let's look at Chainlink's a few metrics. Let's look at maybe network profit loss and exchange inflow. By the way, guys, the metrics that I'm looking at today, they're like 6 or 7 different metrics. We have over 100 different indicators on the website. I'm just using some of them because it's easier to sort of fit it in an hourly format, right? If we had 3 hours to talk, I would look into maybe 10 or 15 different metrics, maybe even more. So just keep in mind that this is just a very short or a sort of narrow view of what Sanebase can offer for you. So if you really like this type of data, there's a lot more on the platform. So, okay, let's check out exchange inflow for Chainlink. Quite low, actually fairly low. We're not seeing any sort of, Chainlink Army, and you can see these spikes in exchange inflow right around the local bottoms here, similar to what we've seen with Bitcoin as well, right? But overall, we're actually not seeing a whole lot of new amount of Chainlink moving to exchanges. We have seen a spike around the local bottom, so let's zoom in a bit to see. There we go. So, okay, let's compare this to Bitcoin. So this is Chainlink, and this is its exchange inflow as it was bottoming out. So first, big spike around the local bottom. Secondly, a big spike around the next bottom. So if you look at Bitcoin, same thing. Spikes around bottom, here as well. Bottom. So sort of the same idea is in play. When you see big spikes in exchange inflow as the coin corrects, it does seem to indicate that the crowd is becoming, or the holders are overselling it a little bit and becoming sort of too irrationally, there's too much bearish bias compared to Chainlink's fundamentals, right? So let's look at the network profit loss for Chainlink. Let's see if we get, okay. So we're seeing a few sort of spikes in Chainlink's network profit loss. Now, I would actually be careful when using network profit loss for Chainlink in particular, because like I said, the way that you use network profit loss is that you take the price at which each unit of link was moved previously, and you assume that that is its acquisition price, and then the next time it moves on the blockchain, you assume that it was its sell price. Now that works better for coins with a singular use case or a purely speculative use case like Bitcoin. However, for Chainlink, there's a lot of different use cases for Chainlink. So whenever a coin moves, a Chainlink coin moves on the blockchain, it doesn't necessarily obviously need to mean that it's being sold. But overall, it's definitely telling that there's a slight increase in network profit loss over the last 48 hours, suggesting elevated profit taking by some Chainlink holders. We have, however, seen another sort of drop. So let me zoom in so you can see it. It's very similar to Bitcoin here, right here at the bottom. A dip in network profit loss, similar to here. So let's move to Bitcoin and see what we see there. It's pretty much the same thing. Big dips in network profit loss, suggesting that overall the crowd is panic selling. They're selling their coins at a loss on average. All of the coins, Chainlink coins that were moving on the blockchain at this point in time, right around its bottom, were doing so at relative loss. So it suggests that a number of holders that have probably bought around these levels are now starting to get the heck out of the coin because they're scared. And it's marked a local correction. So since then, we have seen a few upticks in net for profit loss. This could be coins holders moving their bags and starting to take profits. But given the fact that there isn't really an uptick in exchange inflow to go alongside it, it might just be some general on-chain activity, right? Okay. Lastly, let's look at MVRV. I wanted to also look at H consumed, but Chainlink's H consumed is very iffy because of its oracles or oracle tokenomics. All right, so Chainlink's 30-day MVRV is at about plus 9%. Not great, not terrible. So everything that this really tells you is that short-term Chainlink holders are about plus 10% of their initial investment. As far as long-term Chainlink holders, they're currently at about plus 87% of their initial investment. So then the decision that you need to make for yourself is to figure out what you think this will mean for Chainlink's future price action. Do you believe that at these levels, at around plus 10%, the Chainlink army, the short-term Chainlink or sort of swing traders, are going to start selling, or they're going to sort of hold off on taking profits before they reach a sort of a higher profit margin, which we have seen them do previously? You know, Chainlink's 30-day MVRV has peaked at 35%, 37%, 39%. So there has been an even, upwards of 50% here. Let's look at the last year of data to see where we are. Yeah, I mean, it's usually sort of at these levels that we really see MVRV start to peak. So we're not there yet, but it is sort of in the positive. So it's not like a clear entry opportunity or an opportunity to accumulate, because we're not, for example, here, or where we were here, where it suggested that we are vastly undervalued relative to previous Chainlink's MVRVs. We're at a sort of normal pace. There's a potential for further price appreciation according to MVRV before we really enter the danger zone, but it's not guaranteed. All right, let's maybe lastly check out social volume for Chainlink. Overall, I mean, in general, Chainlink has been, having a relative uptick compared to the last year of data, yeah. But I mean, this is across the last month or so. There's been alongside the Chainlink's price action, there's been a spike in social mentions, but nothing out of the norm. There's been a big spike right around the top here, but since then it's remained fairly insignificant. So, similar to MVRV, it's sort of at the neutral level. So we could see it go up, we could see it go down. But I think that's gonna have to do it for today, guys. It's already 5:15 on my end. We need to, we probably shouldn't take any more of your time. If you like these types of metrics, there's a lot more of them on Sandbase, app.sentiment.net. You get 2 weeks free to trial all of the metrics before, afterwards it's just $49 a month, which is still one of the most, if not the most affordable sort of on-chain and social data provider on the market. In fact, there's nobody really that has social activity data, at least as far as the comprehensiveness of data compared to us. So I strongly suggest, if you're not already a subscriber, check it out. Try it out for a couple of weeks, see the power of it, and I'm pretty sure you're gonna stick around afterwards. So do we want to create another prediction, Max, before we go? Let's make another prediction on SanR. So if you want to play along, check out sanr.santiment.net. You can create your own predictions and battle it out against other people. So let's say, for example, do we have MATIC here? We don't yet have MATIC. Okay.
We do have Link, I believe.
We do have a link. I would actually look into Bitcoin. So this is just a demonstration, guys, of how the platform works. Don't take this as financial advice, all right? So the only thing that you need to do is you need to figure out whether Bitcoin or whether you believe Bitcoin is going to rise or fall from these levels. You can also set up a few advanced parameters like target price and stop loss. So let's say according to these sort of spikes in exchange inflow suggesting oversold conditions and dips in net profit loss, and we can say, okay, maybe there's a short-term potential for Bitcoin to rise. It's already sort of rising, but if you believe that is the case, you can say create a forecast, and we can enter this forecast in our rewards program, where your forecast
just
becomes...
Don't forget, then to close it on time, yeah?
Yes, I do need to close it on time.
Because,
so
yeah. Okay.
Yeah, I just let Ada slide for a while. Yeah, I should have closed it maybe 2 days afterwards. So we open the forecast, we sign a message in our MetaMask.
And guys, that the only time any payment involved, of course, well, some tokens obtain, but I think we have now enough liquidity on trust exchanges. And when you deposit SAN to our platform or withdraw, this is the only time when you need to pay some fees. Otherwise, once you start making bets or following something, it's just done with your signature. Yeah. So we collect signature, and the rest is you don't pay.
Yeah.
So don't think that that you know how things work, and don't be afraid. And we're moving, and actually, as today our dev says that they already set up, and we are testing our layer 2 sequencer. So we hope that soon things will be even more exciting, and easier, and faster, and cheaper. Mm-hmm.
Thanks, Max. Check out SanR, guys. So my ADA prediction, I still have 6 days, so I guess I can hope that ADA is going to chill out a bit and help me out here because I forgot to close it. But if you want to, compete against me and other people in the Santiment community, check out SanR.santiment.net and create your own predictions. Okay, that's going to do it from us today. Brian, anything to say before we go?
Today is our very last day of our Sandspring Fling promotion. It ends around midnight. Not sure what time zone. I think we can extend it to my time zone since it's one of the last. So Pacific time, meaning you have about 16 hours remaining to get in on a 40% off sale, meaning that our normal $44 to $49 per month rate, depending on whether you're getting a full year or just 1 month, is now lowered to about $29 a month, or at least for your first month. So it's a pretty nice discount, and it gives you a full month on top of the 2-week trial that you would get from making a Santiment account to explore all of our metrics. I definitely recommend you guys check it out. You'll see exactly how to do it in all of our tweets. If you've been following our Twitter, I'll link directly to our pricing page, and you can go from there. And we really hope to see you as a part of our community and on our Discord, where we have regular, fantastic talks about what's happening in the markets.
Yeah, so like Max just mentioned in the chat, if you use the coupon code and it doesn't work for some reason, just make sure to to contact the customer support, and we'll help you out. That's gonna do it for us for this week. Get over on our Discord and let's keep talking about the crypto market, guys. Until next week, I want to thank Brian and Maxim for joining me for this call, and talk to you all in 7 days.
Thanks, Dino. Thanks, guys.
Bye, guys.
Bye-bye.